In this video, I want to take a quick look at the balance sheets of two of the airlines in our comp set. The two outliers here, Spirit Airlines and Delta. Spirit with a debt balance of $0 and Delta with a balance of 12.5 billion. And let's see if we can figure out what's going on behind these numbers on the balance sheet. Now, I'll give you a hint. There were significant events in the recent history of both of these airlines. Spirit went public in 2011, and Delta emerged from bankruptcy a few years ago. And that certainly has something to do with their debt balances. So let's take a look at their balance sheets. We're going to start with Spirit. And I've gone out to Google Finance and pulled up this balance sheet. And I chose, for this example, I chose annual data. So our time periods here are annual instead of quarters. So we have 2012, 2011, 2010, 2009. And let's see if we can take a look and see that zero long-term debt balance. And here it is. So Spirit Airlines has a zero total long-term debt balance for the year ending 2012. They had a zero balance in 2011, and then prior to that, they had 91 and $87 billion worth of debt. So the significant event occurred, right here in 2011. Spirit went public. They used the proceeds of their offering to pay down their debt, and now they're managing the company debt free. And this is really remarkable. I'm going to add a caveat in just a minute, but to see an airline's balance sheet with zero debt is really unusual. And there's no minimizing the fact that this is a really healthy balance sheet. And we really haven't dug into Spirit that much, but one of the really significant things that pops out on their balance sheet is this zero long-term debt. Now, the caveat is their capital structure. So when we were talking about the reason for debt, the reason that airlines carry debt, we said the airline business is a very capital intensive business, and debt is a way of the airline leveraging their equity so that they can fund their growth. So they need to finance their growth from somewhere, and most airlines turn to debt. Well, Spirit does have a little bit of a different capital structure. Most airlines, the way they acquire airplanes is they own and lease. So there's some combination of airplanes that they own outright and some that they lease. And then there's operating leases and capital leases. But there's usually some combination at all airlines. Spirit is unique in that they don't own at this time any any airplanes. All of their airplanes are on operating leases. So operating leases, the way that shows up is you see it on the income statement as an expense. You don't see it on the balance sheet. Operating leases don't result in assets, and there's no debt. So you just don't see it on the balance sheet. Now that doesn't mean it's not an important obligation. It's just you have to understand the capital structure of the airline and know where to look for that. So I have a chart here. Let me go find it. So I found this chart on the internet, and it was done in 2012. So it's an estimate of the operating lease obligations for Spirit Airlines for these years. And you can see, you can kind of think of this as debt, right? Because they need airplanes, and the the obligation is there, and they had $42 million in 2012, but Spirit is growing fairly rapidly, and you can see these lease obligations follow that growth pattern. Now, I'm not sure if they're going to do if they're going to maintain this leasing structure into the future, but this was someone's estimate of what it would look like over this time period. So it's the way they've chosen to acquire and maintain their airplane fleet. There's some some flexibility in this arrangement because it may be easier to return airplanes if they found they didn't need them, if there was a downturn in the economy and they didn't need the airplanes. I don't really know what's behind it, but that lease structure is reflected in their debt balance. Now, that is not to take away anything from Spirit's balance sheet. They have a great balance sheet and pretty much the one of the best in the industry, at least at the time of this recording. Things change pretty quickly. So let's go and take a look at Delta then. If you have Spirit with no debt and Delta with something like 12.5 billion, let me go pull up their balance sheet. So I went out to Google and pulled up the Delta Airlines balance sheet, again using annual periods. So we have 2012 and then the last 4 years. Let's go right down to their liability section and find their debt. So here's their long-term debt. And at the time, this balance sheet, this is a different time period than the Excel sheet I've been using. At the time this balance sheet was put together, they had $11 billion of long-term debt. Now, there's no caveats behind that. That really is a lot of debt. And servicing that debt is going to be a burden that Delta is going to have to carry until they manage that balance down. So unlike Spirit, well, they have their lease payments, but Delta has I'm sure some high interest payments to service this debt. Well, actually, though, Delta is seen as a very well-managed, very healthy company these days, and we're going to look at some other statistics in just a moment. But well, if they have $11 billion of debt, and no joke, that's a lot of money, and you can even go down here and see they have negative equity. This does not look like a very good balance sheet. And in fact, there's some issues with this balance sheet. That's an awful lot of debt and not a very good equity position. Well, the couple of things positive that are going on here, though, is this right here. So when we were looking at Southwest debt, I said, take a look at how it's changing over time. And actually, that time scale was going the opposite direction, if you remember that. But in 2000, what year is this? 2009. So at the end of 2009, Delta had $15 billion of debt. And you can see this number is getting paid down dramatically over years. So, $11 billion compared to $15 billion, that is really aggressive pay down of debt. So that's a very positive sign. The other thing that Delta gets a lot of credit for is that they're managing their spending. So let me see if I still have that. This. So in the last video, I was using this example to illustrate how people and airlines can get in trouble if they over leverage. Well, in recent years, Delta has really managed their leverage. So they're levering down the company. They're not going out and growing just for the sake of growing. They're really managing their growth and they're managing their expenses so that they can pay down their debt. And they're seen as doing that very responsibly. And you can see it in some of their other metrics. So let's go over real quick. I'm going to go back to this Yahoo chart that I've been using. And these are just some various metrics on the airlines in our comp set. And you can see the other metrics are supporting what we're seeing on the balance sheet. So here's the market cap. So just the value that the stock market is placing on these airlines. Delta has been given a $24 billion stock or market valuation. United, which is about the same size, is $14 billion, a lot less. Let's look at. I went through and just highlighted some of the things here. The margins, which are a really good indication. Look at Spirit with this 9% profit margin, 9% net, the highest in the industry, and this double-digit operating margin. Don't think that having zero debt doesn't help with these margins. And even Delta, with that tremendous debt, is really managing some great margins. So what that allows them to do is use their income to pay down their debt. And that is improving the situation. So they're getting a lot of credit, not for where they are so much, but where they're going and how they've gotten to where they are. We also have this return on assets metric we haven't used, but both Spirit in particular is the highlight here. And then a cash flow figure here, EBITDA, we haven't talked about. And then this current ratio, we saw this in our video on current assets, where Spirit has twice as much in current assets as needs to pay off its liabilities. Some of that does reflect their capital structure and the way they manage their airplane purchases. So, just a quick look at those two balance sheets, two very different situations, but two very healthy airlines. Now, I think the sentiment you would find from financial analysts is Delta is a lot more vulnerable than Spirit in terms of their balance sheet, because while these are both good companies and really generating a lot of income now, if there's a shock to the system, if revenue goes down, if the economy takes a slowdown, or if fuel spikes, Delta's always going to have that debt burden that they have to manage, and that is going to make them more vulnerable to industry fluctuations than Spirit with their pristine balance sheet.